We're constantly told to focus on the rate of return. Get 8% instead of 6%, you got to beat the market. But what if that's only half the story? What if there's a more powerful yet overlooked principle that the wealthiest individuals and families have used for centuries to build and multiply their capital? It's not just about how much your money grows, but it's really how often your money moves. I learned this principle when I was about 10 years old. It was summer camp. I had an idea. I bought 20 water guns for 50 cents each. That was about $10. Then I sold them to the other kids at camp for $5 each. I made $100 profit. And I took that $100 and bought more water guns. And I repeated the process. By the end of the summer, I had significantly more capital than I started with. It wasn't the high rate of return on each gun, but it was that the money moved quickly, multiple times. You see, that simple childhood lesson taught me about the velocity of money. Most people's money just sits in a savings account, sits in a brokerage account, moving maybe once a year when they get a statement, and that's low velocity. But when your money moves through your control multiple times a year, wealth compounds differently. It's not just about the rate of return, it's about the speed and the frequency of your capital's movement. So how do you increase the velocity of your money? How do you do it in your adult financial life? You build a system designed for it. And this is where the privatized banking mechanism comes in. It's an engine built to make your capital work harder and faster for you, just like those water guns did for me. The core of this system is a properly structured whole life insurance policy. The policy acts as your private bank or your private reserve. Instead of your money just sitting idle, you deposit your capital into your policy. And when you need funds for an opportunity, maybe to invest in a business or to buy a piece of real estate or to make a strategic purchase, you just borrow from the policy. The key is you pay yourself back. All of the interest that you would have forfeited, now it goes back into your own system, further increasing your policy or your account's value. This creates a powerful velocity multiplier effect. Because your capital is deployed, it generates a return. And then when it returns to your policy, it continues to compound. Then it's available to redeploy it again when the next opportunity arises. You see, your money isn't just growing, it's moving and working and compounding multiple times a year. This is how the wealthiest families fund their ventures without ever interrupting their underlying wealth. Compare this to traditional methods. If you use a bank loan, the interest goes back to the bank. If you sell investments, you pay taxes and interrupt the growth. But in both cases, your capital's velocity is limited and the wealth leaks out of your control. With your personal banking system, you capture the velocity and you keep the wealth with you in your own personal economy. It's a fundamental shift from being a capital consumer to a capital controller. Now you might be thinking, that sounds like a lot of work. Isn't it easier just to invest passively? And yes, passive investing has its place. But easier doesn't always mean more effective or even more profitable in the long run. Passive investing means your money is largely out of your control, moving at the market's pace and not yours. It means you're waiting for returns, not actively creating them. The difference between low velocity and high velocity capital is the difference between simply saving money and actively building wealth. It's the difference between being a passenger in your financial life or being a driver. If you want your money to work harder and faster for you, you need to understand and implement the principles of capital velocity. It's a game changer for entrepreneurs and high-income professionals. If the idea of increasing the velocity of your capital or making your money work harder and faster for you resonates with your entrepreneurial spirit, then I invite you into a conversation. In our strategy session, we'll together look at your current financial flows. We'll identify where your capital might be sitting idle, and then we can explore how to implement a personal banking system to put your money in motion. Visit the link on your screen to schedule your complimentary strategy session. It's a diagnostic conversation, not a sales pitch. Let's put your capital in motion and build true financial momentum. Thank you.